From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Westin. We're going to start with the markets once again today. I'd say they're a bit soft, trying to figure out what's going on with the virus, what's going on with eco numbers, but you know who knows all this? That's Scarlett Fu. She brings it to us now.
Hi, David. Good to speak with you. Yeah, the eco data was fairly mixed. The market feels very unsettled. It looks pretty unsettled as well because we had a drop at the open, so there was certainly a direction there. And an attempt at a comeback kind of fizzled out as well. That came as a bunch of virus-related headlines crossed the wires, most notably Texas halting the newest phases of its plans to reopen the economy and cases in Arizona jumping 5%. You're looking there at average value at time. It just illustrates the extent to which we've seen trading dry up in the S&P 500. It's really been a slower than typical trading day so far. Just compared with yesterday, for instance, when we had the big sell-off, we have trading in the NASDAQ off by 25% versus the same time yesterday. Typically, this is the time that you would see investors plow back into their equity safe havens like tech names. But instead, today, the sectors that are outperforming are the two that have been hit the hardest so far this year, financials and energy. Financials still off about 24% year to date, even after today's gain. Energy down about 38% year to date. The KBW Bank Index doing well today as regulators roll back some of the rules that were put in place after the great financial crisis. Banks, for instance, will no longer have to set aside money when trading derivatives with their affiliates. So that frees up capital, and that's always a good thing for a bank. The regulators are also modifying the Volcker rule to allow Wall Street banks to increase investments in VC funds. In addition, don't forget to watch out for the Fed releasing stress test results after the close today. And David, I just wanted to end with Apple and Disney because Apple's closing another 7 stores in Houston after closing 11 last week because of increased virus counts across different states, and Disney delaying the opening of Disneyland in LA, Anaheim to be precise, indefinitely. It doesn't think it can get approval from state officials in time for the planned mid-July opening. David?
Can't wait for Disneyland, no question about it. Thank you so much to Scarlett Fu for that report on the markets. So we talk about the markets every single day, so let's go visit one of them, exactly where it is happening. The New York Stock Exchange had to close to traders, its Florida traders, for the first time in its 228-year history, but now it is coming back. They're bringing people back gradually, about a third of them so far, and we welcome now Stacey Cunningham. She is the president of the New York Stock Exchange, coming to us from the floor. So welcome, Stacey. Really good to have you with us. Give us a sense of what's different now that you've brought at least some of the traders back onto the floor. How is it making a difference? How is it going?
It's been a tremendous success, David. Thanks for having me on. We're excited to be able to not only bring traders back, which we started to do 4.5 weeks ago, but we've been able to continue to increase the number of people coming in because we've had such compliance with the rules and regulations that we've put in place. I'm able to talk to you without wearing a mask because I'm not on the actual trading floor. I'm over the trading floor using a remote cam. But on the trading floor, everyone's wearing a mask. Everyone's following the social distancing protocols. We put a number of protections in place, like installing plexiglass and other things, so that we can keep people safer and be able to scale up the number of people that are coming into the building. And importantly, we've seen it work. We've seen that we've been able to keep the community much safer. And I think that's a message for all of us across the U.S., across cities. When we reopen, we can do it responsibly, which will allow us to scale up and not have to go backwards.
And Stacey, can you keep going? I mean, absent a vaccine, how far can you go to bring it back to full strength, which you had before the pandemic?
Yes, we started with the businesses that were most impacted when we reopened. So the small independent floor brokers, which very often have less than 20 employees, were the largest portion of the first group to come back. Last week, we added on our market makers. They typically work for bigger firms. They're the ones that are responsible for overseeing trading in each of the companies that's listed on the New York Stock Exchange. They've been doing that remotely during the period that they were off the floor, and now they're able to do that live. We continue to scale up the number of people that are coming in, and assuming everyone continues to follow the protocols we put in place as they have been, we'll be able to continue that path.
So Stacey, you're maybe ahead of a number of the large financial institutions down on Wall Street. What do you think that you've learned that they could benefit from as they look to start bringing their people back?
I think it's really important that everyone that's coming in understands that following the protections it's not about protecting yourself, it's about protecting others. They want to be back here and they want to be able to engage in their ordinary business each day and earn a living. And so to do that, we need to protect everybody else in the environment. That's why it's been successful. And I think it's important for all of those businesses to get that buy-in and support from the community as you scale up.
So as you bring people back on the floor, what are you able to do? What are you able to accomplish that you couldn't? I mean, you were up and running, goodness knows, the whole time, virtually, like all of us are now from our homes. But what did you give up by that virtual operation that you're getting back now with people being present?
Yeah, our model is unique in that we combine a market maker who has accountability with human judgment on the trading floor and on sitting on top of very sophisticated technology. So we had two parts of that equation when the floor was closed. Market makers still had the same responsibilities that they have when the floor is fully open, and we're running on state-of-the-art technology, best in breed, but we lost that human judgment. And what we saw was that it cost investors something to not have that reduction in volatility that the human judgment also contributes to. It was an interesting experiment for us. I never would have chosen to engage in it and close the floor just to measure it, but we didn't quite know how much of our outperformance came from having a model that has a market maker versus having human judgment. And what we saw, and what a couple of academics have actually studied since we closed the floor, was that the outperformance comes from both. So we still outperformed other securities, but not to the same extent that we normally do when the floor is opened. So by reopening the floor, we get closer to our full service offering where we can dampen volatility, particularly at the end of the trading day when you start to see stocks move more rapidly. And that closing auction is the largest liquidity event in the world. On last Friday, we had a record closing auction at the New York Stock Exchange, which was 23% higher than our previous record from a couple of years ago. So we were getting that full force back on the floor and leading to better results for investors.
Stacey, even as the pandemics are going on, markets are evolving, and the New York Stock Exchange is evolving or attempting to evolve, specifically with respect to direct listings as a way to go public for a company's alternative to a traditional IPO. You had an application to the SEC. They didn't like it quite so much. You've come back with another one now. Give us a sense from your perspective where that stands right now.
Yeah, direct listings are a really interesting innovation in the capital market space. And while they aren't for everybody, we're hearing from both investors and issuers that they're looking for more choices. So we've been working with the SEC very productively on refining the offering of the direct listing. We've had two companies to date. So Barry McCarthy, who's the CFO of Spotify, came up with the idea, brought it to us. We rolled out the first one. Slack was the second company to choose that path for their public listing just over a year ago. And where we've been building on that model is to allow for capital raising. What the direct listing really does is it separates the timing, decouples capital raising from going public. So you can choose to go public, but not necessarily raise money at the same time. So the two to date have taken that path. Now what we're working on is, what if you want to raise money at the same time, but you'd like the exchange and the process of opening that morning to determine how that offering gets priced. So that's the phase that we're working on with the SEC now. We filed the first iteration back in December, and we work productively with them on questions that they have. So this most recent filing, which we submitted on Monday, answers mechanical questions around how that offering will actually be priced in the morning, how does it get entered into the market as an order, and what measures need to happen that morning to get that live in public. And we've been advancing that ball so that we continue to work with issuers and investors on having another alternative to the public markets.
So Stacey, you're in the middle of this regulatory process, and none of us knows exactly how or when it will come out. But from your perspective at this point, is it really a mechanical issue the way you described it? Because that sounds like we have to work it through. It may take some time, but it's not a substantive issue that you will get there sooner or later.
Yeah, I think that's right. And that's how it worked with Spotify. It took us about a year and a half working with the SEC, the Division of Corporation Finance, very constructive feedback and dialogue, because their goal is to protect investors. And so they want to make sure that they are working with us to develop a process that achieves that goal. It took about a year and a half to get that done. We are working on this iteration, and they're not substantive issues. They're more about how does it actually come to market, how does it get priced, how do investors know what to expect that morning from a price level range perspective, and how do we know that all that interest gets satisfied? So they're really more mechanical issues that we've been working on. I do think that we'll see direct listings have the ability to raise capital at the same time of their listing in the not too distant future. And there are some companies that have been asking about it too, because they're interested in pursuing that path. It really just builds on new innovations. I mean, you've seen SPACs. I mean, I don't know how we've seen over this period of time that during COVID-19, when the markets have been very turbulent, you've seen a tremendous number of special purpose acquisition corporations, which are management teams raising money, IPOing, without having the business operations yet, but planning to go out and acquire a business. And I think the fact that we've seen so many SPACs come to market over the past few months is really indicative of the fact that there are opportunistic businesses out there. It's another way to come public, because at the time of that business combination, the combined entity is now a public company. So it's just one more path to public we've been working on.
Stacey, in success, if this all gets worked out properly, how much difference will it make in your business at the New York Stock Exchange? Do you anticipate more companies will go public, or if they go public, they'll be listed with the New York Stock Exchange? How material would it be for the New York Stock Exchange?
Well, first of all, I don't think direct listings are going to be the path for every company, but there are some companies that are considering it. We're the only one that's ever held one, right? The fact that we have human beings involved in the process on the trading floor, overseeing that price discovery process, puts us in a unique position to be able to make sure that things are flawlessly executed, not just at a time of IPO, but especially when you look at a direct listing. What we've seen in the direct listings to date is those opening auctions are much larger than the typical opening auction for an IPO. Both Spotify and Slack were in the top 5 size number of shares printed in their opening auction of all opening auctions in history, among a list with the largest IPOs of all time. Even though as companies, they were smaller than some of those companies. Really massive trades, because so much price discovery is happening. That's why price discovery is such a critical part of the direct listing process, and we're really uniquely positioned to accomplish that.
Stacey, you mentioned the turmoil, I think it's fair to say, in the economy generally, which has really caused the government, through monetary policy and fiscal policy, to inject an awful lot of money into the economy. Is it shifting the way corporations are raising their capital? Because let's face it, borrowing has become a lot cheaper. Do you think that this may, over the medium term at least, mean the corporations increasingly turn away from equity raises and into debt raises?
We saw a number of companies leveraging both equity and debt throughout the pandemic. Just in those weeks the floor was closed, we raised over $35 billion, or companies listed on the New York Stock Exchange raised over $35 billion during that period of time, using follow-on offerings, as well as capital raising in a more traditional IPO process. So I think you'll see that when there are tools out there, companies are going to take advantage of them. Many companies were raising money because their businesses were under pressure due to the pandemic, but others were shoring up their balance sheets for the future. And it's been a very active capital market season, as you know and you see, and I think we'll see that continue. Certainly in the IPO market.
Okay,
I mean, we have 5 deals expected to price tonight.
Wow, there you go. Thank you so much to Stacey Cunningham. She's the president of the New York Stock Exchange. Great to have you with us, Stacey. And a reminder, a program note, that Friday at 6 p.m. Eastern Time, we're going to be back with Wall Street Week, covering all the events of the week, including what's going on the New York Stock Exchange. In the meantime, here, coming up next, we're going to talk about those economic numbers, particularly the jobless claims that remain stubbornly high. We're going to talk about that with Mike Mckee. That's next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. It is time now for Bloomberg First Word News, and for that we go to Mark Crumpton.
David, thank you. Several U.S. states are seeing a disturbing spike in coronavirus cases. California and Florida continue to see their numbers increase. Texas is pulling back on some of its reopening plans after seeing its worst day so far for new cases. And in Arizona, health officials reported a jump of 5.1% in new cases in the past 24 hours. New York City restaurants will be able to open for indoor dining on July 6th. Personal care services can also resume. It's part of Phase 3 of reopening. Overall, the state is reporting 996 new coronavirus hospitalizations. That's the lowest number since March. The Supreme Court is strengthening the government's ability to quickly deport people who enter the country illegally. Justices sided with the Trump administration and refused to give asylum seekers a broad right to make their case to a federal judge. The case involved a Sri Lankan man arrested near the Mexican border. He had tried to persuade immigration officials that he faced harm if he returned to his country. Pro basketball star Lebron James has put together his most ambitious deal yet. He and business partner Maverick Carter have launched media empire Spring Hill Company with a $100 million investment. James spoke to Bloomberg Business Week about the company and a number of other issues. One of them, a group he helped create called More Than a Vote, which is focused on protecting voter rights and preventing suppression, specifically in the black community.
The education side is what we're most proud about. That is success for us, where we're actually getting these communities out to vote, but they're even more educated on who they're voting for, how they can vote, where they can vote. They have that power.
You can watch all of Bloomberg Business Week's conversation with Lebron James and Maverick Carter. That's at 7 p.m. New York time Friday here on Bloomberg Television. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. And even as Mark was talking, there was a headline crossing the Bloomberg, and it says that the Senate now has passed a bill that will punish China because of Hong Kong. We know that in Washington, where there is not much bipartisanship, right now there seems to be agreement on both sides of the aisle that something needs to be done about China. We'll continue to follow the story as it develops. In the meantime, we got economic data out this morning, and among other things, it showed that nearly 1.5 million Americans filed for jobless claims last week, still a stubbornly high number. We welcome now Michael Mckee. He's Bloomberg Chief Economics and Policy Correspondent. So, Mike, it's coming down, but really very, very slowly.
And that's the important thing, David. We're all desperate for good news, but the problem is we're not really getting it. And it's not the actual number itself, but the direction of the number, basically flat. 1,480,000 people filing for jobless claims last week, raising the question, why are that many people still losing jobs 14 weeks into this? Or is there something wrong with either states processing or with fraud or with something else? It's a lot of people who keep losing jobs, at least if you take it literally. Continuing claims dropped just a little bit. They're below 20 million, 19,522,000. But that's 2 weeks old in terms of the number. And it also doesn't include those getting pandemic unemployment insurance, the people who were self-employed or gig workers. 728,000 more added to the rolls this last week, which means that over 30 million people are getting unemployment benefits of one kind or another, David.
So does this tell us anything about the jobs numbers that we're going to get next week?
It doesn't appear to, in the sense that they were disconnected from the jobs numbers last month, but economists think we might get a small gain in jobs in May because a number of the other numbers were better in May. We saw that with durable goods today, durable goods orders rising on a percentage basis, which is what economists had expected, 15.8% after dropping 18% in April. But the important thing to look at is that chart there. That's the dollar figure, and we are still way, way below where we were in February before all this started. So while we did get a little bit of a bounce, even if we got some additional jobs in May, it's not going to show a real strong improvement, given how many people we see are still getting unemployment insurance.
Mike, I think there was a surprise to the upside on durable goods and things like that. Is that giving you any encouragement?
Not really, for the reasons I was saying that we have at this point. We're still so below where we were. Also, you look at the trade figures out today, the trade deficit widening significantly to $74.3 billion, in large part because exports just collapsed, which means we weren't making things and we weren't selling things. And the implication there is that second quarter growth is going to be worse than we thought. After some of the April numbers came in better than expected and a little bit of May came in better than expected, people were marking up their GDP figures for this quarter to, maybe negative 30% seasonally adjusted on an annual rate. But now that's going to go down. You look at the Atlanta Fed GDP now numbers, they're going to be reduced because of trade. So all in all, we get some minor movement in the numbers, but no real change in the overall story. The economy is still in trouble.
And Mike, to sort of gild the lily here, that's before we have Texas saying we're not going to continue our expansion. We have Florida cutting back. We got real problems going on in some of the states, which cannot be good news for the economy, I should say.
Absolutely not. And the more states experience this surge, the more likely we're going to see another surge in jobless claims. We're going to see people who might have dropped off the rolls otherwise stay on them, and new people come on because companies that had started to reopen and maybe have used up any PPP money that they had will have to let people go. And so it is definitely bad news, and it does suggest that any hopes of a V-shaped rebound are really a dream at this point. We're going to struggle, whether we go down significantly or just flatline. It's going to be a long road.
Okay, I'm afraid that might be right. Thank you so much to our colleague, Mike Mckee. Coming up next here, we're going to do Stock of the Hour. It's Disney. It's down today. News is going to have to pull back on its plans to reopen Disneyland out in California next month. That's coming up next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Disney is our Stock of the Hour today because unfortunately it is down on news that may have to postpone the opening of its Disneyland theme park out in California. Kaylee Lines is here to explain it to us. Kaylee?
Yeah, David. Well, that park over in Anaheim has been closed since March 13th. It was set to reopen on July 17th, and that has now been delayed indefinitely. Basically, Disney didn't think they were going to be able to get the proper state and local government approvals or reach agreements with the unions in time to reopen that park. Now, of course, this is pretty significant for Disney. It comes as, of course, cases are rising in California. Just yesterday, they were up 7.1%. But the Anaheim park in particular is key because, as we know, parks are a major revenue driver for Disney, and Anaheim is one of the most attended parks. Nearly 19 million people attended last year. That is the second largest attendance globally. Granted, the one in Orlando, that Disney World, is actually the most attended, and that is still set to reopen on July 11th. But this is, again, a key revenue driver for Disney. We saw in the second quarter the impact these shutdowns had. That operating income was cut in more than half to just $640 million. So Disney really wants to get these parks reopened, David.
Yeah, and Disney World in Florida is really key, as you just suggested, because it's true Disney World itself is something slightly bit bigger, but if you take it and put it together with Epcot and also with the rest of their theme parks down there, it's almost 3 times Anaheim.
And
they have to go back on that. It's really going to hurt them.
Right, and I would make the point, too, that even if it does reopen as scheduled on July 11th, it's going to do so at a very limited capacity, only 30% of the usual. So that is a big impact. And I have to also note, David, as this was an initial jobless claims day, the impact that these parks have on their broader economies. In Southern California, for example, Disneyland has an economic impact of $8.5 billion a year. It provides just the park 35,000 jobs. So we have to consider all the ripple effects of this as well, David.
Yep. Okay, thank you so very much to Kayla Lines for that report on Disney. Speaking of Disney, we're going to be joined by Abigail Disney, the renowned filmmaker, on the question of income inequality in this country. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Our colleague Eric Schatzker talked with Barry Sternlicht, the head of Starwood Capital, this week, and he talked about what's coming up in November with the election, and he asked, among other things, whom Barry would vote for if the election were held today.
I'm going to wait to see who Biden picks as his vice presidential candidate. I think it'll say a lot for the direction of the country. I'd like the country to be governed from the middle. 43% of the country is independent, and they're pulled in both extreme directions by 2 radical parties that I don't think represent the majority of Americans today. So it's a tough thing. I don't understand why Trump, who I knew before he got into office, why he has his stand on the environment. It's not an important stand. He could give the independents something. He probably can't go pro-choice, but he could go pro-environment, or at least enter the dialogue on the disaster that we're creating to this climate, and join the conversation, because it's 96% of scientists agree that we're creating a disaster for ourselves. And on the left, I don't think you want to throw out capitalism. I don't think there's a better system. It needs to be regulated. Some of the financial engineering that we've done in the name of liquidity, or whatever you call it, I think is a joke and isn't necessary, and you need to regulate it. Capitalism hasn't worked. Like, for example, when he cut corporate taxes, he could have tied that to job creation in the United States. There could have been a more direct link to bringing back jobs. You have an opportunity now, because I think the one thing the pandemic showed is that our supply chains are too long, and and that we've outsourced key things that we need that we never thought were key, whether it was masks or ventilators or other PPP equipment. I mean, now somebody said we went from just-in-time inventory, we have to create just-in-case inventory. And that should be a manufacturing boom here, led by technology and robots. Even though they won't be the jobs of Ford Motor, but Americans are going to have to pay $1 more. We've never been willing to do that. We're going to have to pay $1 more for a product because we cannot match the labor costs of the Chinese or the Vietnamese or the Bangladeshis. And so we either have to extract the labor from the product or be willing to pay more for a product made in the United States. We've never been willing to do that. My father ran a manufacturer of flashlights and batteries. He ran it in Norwalk, Connecticut. He went to see the largest retailer in the United States, whose name starts with a W and ends with a T. And they said, we'll buy your product, but I need it for $2.50. And my dad could only make it for $2.70 in Norwalk, Connecticut. So he had it made in China. And then he got the order from the company that starts with a W and ends with a T. So he outsourced Norwalk, Connecticut. And this was 25 years ago. And that's because Walmart wanted that flashlight cheaper for its US customers. And so 90% of what Walmart sells you is, I just told you the name, was manufactured in China. And we demanded it. We wanted to buy Nike sneakers 30 years later for the same price we bought them for in 1965. So, and we did it. We actually succeeded in doing that, but we moved. They didn't steal our jobs. We encouraged them to manufacture for us because it was cheaper. And then it went a little overboard. And they didn't open their markets, and that's not fair, right? The currency doesn't convert. That's not fair. They're playing, and they didn't open their markets to American competitors, even the airways. So, but we were happy to have Chinese goods here, and the quality got better. In the beginning, the quality wasn't good, but then the quality got better. So, who am I going to vote for? I managed to avoid that. So, the far left scares me. I don't think that's America either, and I don't think. But we're upside down. Things like student loans. I mean, that's the one thing we should encourage in this country is the education of our youth. And the student loan should be at 1%. Should be the most subsidized loan in the country. And because the government gets a tithe, they get to get the taxes on their future income if they've made it through college. And why do I want them burdened with 10% loans, $200,000 of 10% loans that they're just dying under? We're supposed to encourage people to go to college and get a better, higher paying job. And then the government tax them. So there's a return on investment. That's what the federal government should do, encourage certain kinds of behavior. And we want to educate our youth. And that's how you build a strong country. It's not through weapons, it's through a strong economy. That's the strongest defense we can have for the United States is a strong economy, not one on 23 trillion of debt and adding $2 trillion a month. I mean, that is not a sustainable program. So, it's making the nation wealthier by educating everybody and finding, and then private partner mentoring, companies mentoring, picking up the German system of companies mentoring and working with youth, helping them gear up, supporting 2- and 4-year vocational colleges. We have to get on the job because I think that's the biggest challenge the United States has faced is that the deterioration of its public school system has led to this, what you see today on the streets of where people are outraged.
Barry Sternlicht talking with our colleague Eric Schatzker. In the meantime, there's some breaking news, not unexpected, but not good news either. Houston area intensive care units have now reached maximum capacity, something that everyone was concerned about. It appears it has now happened. We'll continue to follow that story here at Bloomberg. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. Economic inequality has been growing in this country for a generation now, something we saw in stark terms because of the pandemic, as Black and Hispanic communities were hit so much harder by the disease than white communities were. Abigail Disney is someone who's devoted much of her career to addressing the issues of inequality as a filmmaker, an award-winning filmmaker, I must say, as a philanthropist, as an advocate. We welcome now Abigail Disney to Bloomberg. welcome. It's good to have you here. Give us your sense, because you are a student of this, you've followed it. How do we measure how bad it is and what got us here?
Well, I mean, I think there are lots of people measuring how bad it is. And I think we've seen a million studies and a million pieces of evidence. But in terms of the felt experience, the lived experience of people, all we have to do is look at how incredibly deeply the effects of this virus have been divided racially and economically. So how did we get here is another whole question. I mean, I think what we're learning from this conversation about systemic racism is that you don't need an individual racist in a system for a system to be racist. It's about outcomes. And so whether or not individual people inside of our economic structures intended for this to happen or not, 50 years of changing American economic policy and social policy to eliminate the power of unions to negotiate better on behalf of their laborers, tax policy that has just consistently been rewarding wealth and punishing work, and then a corporate ethos, which has privileged the shareholder over every other interest inside of the company. All of these things have come together in a kind of a perfect storm that has just driven wealth all the way. It's like money has been driven uphill and is being held there by unnatural forces.
Yeah, as I said and you say, this has been building for quite some time. This is not an overnight phenomenon at all. By the way, under Democrat as well as Republican presidents, I should say. Basically, Washington has allowed this to develop. Let's talk about tax policy specifically. What should we do with tax policy right now? Is it a matter of increasing corporate income tax? Is it a matter of increasing income tax on the wealthy? Is it inheritance tax? Is it wealth tax? Right. What's the best way to address this problem?
I mean, sadly, I'm more of a shotgun approach than a single silver bullet, because it's been the shotgun approach that has gotten us to this point. So, Republicans consistently and Democrats less consistently have pushed the idea that government is bad in every iteration, and that money always is best in the hands of private individuals. And at the abstract level, all of that is well and good, but we've starved state governments and city governments, and so and all of that creates a cycle where inequality worsens. So we need to, first of all, look at things, I think, philosophically. Like, do we honor work over ownership, or is ownership the more important role in an economic system? I happen to believe work is something that needs to be honored more. So if you take that philosophical viewpoint and you look at our tax structure, and then you see that, for instance, the capital gains are taxed more favorably, and that income can be viewed as a capital gain, say if you're in private equity or in hedge fund investing. So the carried interest loophole I would go after first, right out of the gate, partly because of the money that it would generate, which is actually not enough to fix the problems we're in, but it's certainly enough to send the message that the work of people should be taxed favorably, because work is what makes markets work. Sorry, I got lost in that sentence. I would go after the inheritance tax, which has been called the death tax for years. It is not. It's a tax on an inheritance and not on the estate. So we need to be looking at that as a tax that I receive as a person who inherits money, that I pay for and I'm responsible for because of the privilege I have of being able to have money passed to me by my grandfather, whose work and accumulation of capital was supported by the state in more ways than we can count. We need a wealth tax. I frankly believe Elizabeth Warren is completely right about that. I think it is very easy to talk about a 1% or a 2% wealth tax that would generate so much value in this economy, given how much wealth is concentrated, and is sitting there not moving through the economy in ways that it really should, and certainly not supporting a valuing of work over ownership. So if we could move some of those assets that are just sitting there like stones in a mountain back into circulation in the economy, we would have money to fund schools. We would have money to fund all of the things that we have let erode over these last 50 years.
Abigail, one would say that if you go back to the Gilded Age, it took a fairly wealthy person who was part of the establishment to turn things around, Teddy Roosevelt in reform in the late 19th century, early 20th century. What's it going to take this time? Is it going to require some of the wealthiest among us to really step up and make a change? Because it is a systemic problem, as you suggest.
Right. Right. It is going to require wealthy people to change the way they understand their relationship to the rest of the country. Because right now, everything that wealthy people do only reinforces them in this idea that they're separate and different and that their fates are not woven together with the fates of people across the rest of the economy. So the private rooms and the private planes, and the private lessons and all the private schools, all of this is a reinforcing of a set of assumptions about how different the rich are and special and entitled. So we are going to have to teach our wealthy people to be different. We are going to have to show them all that they benefit. And we're going to have to talk about this sort of radical idea that there is such a thing as too much money. There is such a thing as too much money. And like, if we could get our wealthy class, they're always going to be bad actors, but for the most part, most people mean well, and most people want to be good people. And I think that overcoming of this idea that what you do and what you have has nothing to do with everybody else, if we could overcome that misconception, I think that wealthy people would be very supportive of behaving differently as citizens in a bigger society.
Abigail, what's gone wrong with the political system? Because I've looked at the numbers, and it's the 99% who are being disadvantaged by the 1%. That 99% could outvote the 1%. Why doesn't that happen? The theory in this country was once we gave everybody the vote, it would correct itself. That didn't happen. Why?
Yeah. Well, I got to say that, we cannot underestimate the importance of Citizens United. But Citizens United happened as the result of a long 50-year commitment of the wealthy and moneyed interests in this country to changing the structure of how things were happening. So we have come, we've always had a winner-take-all system, but it didn't always quite yield the kind of narrow and specific interests, the results for those interests as it is right now. So, 50 years ago, Milton Friedman, we all know, came out with an article in the New York Times and began to popularize the idea that only shareholders matter. So that was the beginning of a corporate mindset that resulted in the Gordon Gekko greed is good sort of way of operating. And I've had hedge fund managers tell me that they were there on Wall Street when he said that. And he said it was like, one of my friends said, it was like an animal was unleashed. So that was happening. But we forget that at the same time that was happening, there was something called the Powell Memo, where the Chamber of Commerce asked Lewis Powell, who eventually becomes Supreme Court Justice, to write a memo on how he would change America to become a more pro-business culture. And the two things really dovetail in a way that's incredibly important, because Milton Friedman said free markets work for everybody best as long as you're playing by the rules. Lewis Powell said the free markets are not working for us because the rules are bad. Right. So at the same time as corporations were shifting the way they operated and their emphasis on shareholders, following what Milton Friedman had to say, they were also investing very heavily in rolling back regulations, in changing tax structures, in privileging corporations, and in moving corporate interests into the center of legal thinking, jurisprudence, and legislation. So between these two things operating together for 50 years, that's how you get a Citizens United. I would love to rest all of this problem on the one decision, but it took a lot of work to get to that decision.
Yeah. Okay, thank you so much, Abigail. Really appreciate you being with us. That's Abigail Disney. In full disclosure, that Powell you referred to is Lewis F. Powell. He ended up being a Supreme Court Justice, and I ended up clerking for him. This is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Capricia Marshall has spent much of her career at the center of power in Washington, serving as the special assistant to First Lady Hillary Rodham Clinton, and then as the social secretary in the Clinton White House, and then as chief of protocol for President Barack Obama. And she's written about all of it now in a brand new book. It is called Protocol: The Power of Diplomacy and How to Make It Work for You. We welcome now Capricia Marshall to the program. So congratulations, first of all, Capricia, in the book. But really give us a sense of protocol, because one of the things I learned from reading your book is it's a lot more than just being polite, knowing manners when it comes to international relations. It actually can form some of the structure for some of the decisions that get made.
Oh, that's absolutely right, David. And thank you so very much for having me on your program. You know, in government, what I always thought of protocol as a superpower. It starts the wheels of diplomacy, and it lays out a well-defined roadmap, very detailed roadmap for every interaction, no matter the size, whether it was big or small, between our global leaders. You know, I prepared everything for the president and the secretary of state before they even walked into a room, from all of those details about the encounter, the size of the room, the table setting, color, lighting, everything. I would attend to all of those details, but as well, we would really consider issues like language. What type of language was going to be discussed? And then all the way down to mindset, because we wanted our leaders to be in the right mindset before they walked into the room. And equally, we wanted to shift the environment and the ambiance so that those, our counterparts, were in a proper mindset. The whole ideal of protocol is that you want to create bridges of understanding, bridging relationships, but then you also really want to persuade your counterpart to your way of thinking. And so all of those details of protocol, the nuances, those micro moves put together had a major impact on everything that the president did.
One of the things I really enjoy about your book, Capricia, is that it gives some great stories, and I'll just draw on two of them here. The contrast between two meetings between President Obama and President Putin of Russia, one in Mexico, one in Ireland, and you go through the configuration of the room and things like the fact that if you have too high a ceiling, actually people think abstractly, they don't get concrete. It was a big success in Mexico, not so much in Ireland.
That's exactly right. You know, the meeting in Mexico was really important because this was the first time that President Obama was meeting with President Putin as president. And so we had a lot of skin in the game here. I met with the NSC advisors and understood the broad points in the agenda, what they were going to be meeting about, so that I really understood with my team how we had to construct that environment. And like you say, you know, from the size of the room, it really mattered because what we wanted President Putin to feel was a little pressure. We wanted him to feel pushed into answering the hardline questions that were going to be presented, like Syria. And so the smaller the room, the more pressure he felt in addressing those issues. And like you say, you know, the lower ceiling height forces folks into making some concrete decisions. And I have to say our roadmap really worked at that meeting, because when the leaders emerged and they gave us the readout, it seemed like they came to a closer consensus. And, you know, didn't really work for the visit that the Russians set up for us when we were in Ireland. It was a vast, big room. The seating arrangement allowed for them to feel some distance. There wasn't a face-to-face, which is often very good between the U.S. and Russia, because they while they're addressing these hardline problems, you want them to be looking each other into the eye. Everything that was surrounding that environment was there wasn't any ambiance. There was no environment. We didn't know what they were thinking, and they certainly weren't projecting anything on us. And at the end of the day, they walked out of that. You could tell from the photographs this was not going well. At the end of the day, they walked out of it not really coming very close together in any decision. So protocol creates that environment through all of the details that we put into place so that we can get the outcome that we want and really pivot the power to our advantage.
So Capricia, finally, most of us are not going to set up meetings between heads of state in our lives, but a lot of us do set up meetings. I mean, in the business environment and other environments. What could we learn? I must say, when I was running ABC News, I wish I'd known some of these things. I think I would have rethought the way I configured some of the rooms. What should we be taking away from your book?
Oh, golly. It's the reason that I wrote the book. I wanted to use these tools for those in business and in their individual life, because if, you know, from a president to a CEO, you want to make sure that they have all the tools at their disposal to, you know, create the most advantageous environment. So in your business, what you are thinking about is your branding and your culture. You know, how do you define your ethos when you think about what's the cultural IQ of the business? Ideas like hiring a culture officer who can make sure that those who are coming on board have that understanding of what your business identity is. And embracing, of course, diversity. You've been talking about that quite a bit on the program. Right. You think about the microculture in a business, like where does the CEO sit, and who runs the meeting, and what's the dress code, the expected dress code. All of those details.
As I say, I wish I'd had it when I was running ABC News. Thank you so much to Capricia Marshall. She's the author of this great new book called Protocol. Coming up in the next hour on radio for Balance of Power, we're going to talk with the Florida Commissioner of Agriculture, Mckee. That does it for television for today. This is Balance of Power on Bloomberg.